CNBC TV18, celebrating 15 years of leadership.
Dalal Street dances to global Q sees a bounce back after 5 consecutive days of decline as global markets rally post the Fed's comments. The Nifty adds over 100 points, closing above 8,150. The Sensex surges by over 400 points, ends at 27,126.
SpiceJet will soon get an investor on board. That's what the airline told Aviation Minister Gajpati Raju. This even as normal operations resume. Sources meanwhile tell CNBC TV18 the airline has also promised about 120 crores in fresh bank guarantees to the Airports Authority.
With SpiceJet in trouble, the Civil Aviation Ministry sounds an alarm bell on domestic airlines. The government mulls financial relief for the sector, also considers a proposal to regulate airfares. That's another exclusive.
With just 3 days to go for the end of this winter session, the deadlock in the Rajya Sabha continues. The insurance bill still waiting to be tabled, and the government may now use the ordinance route for deciding a cap on FDI for the sector. The constitutional amendment bill on GST could be tabled on Monday.
The government gears up to revamp the gas utilization policy. The cabinet note prepared by the oil ministry says city gas distribution and piped natural gas may replace fertilizer as the highest priority sector for new gas that comes on stream. That's an exclusive.
The government releases the approach paper to seek public comments on coal block auctions. Regulated and non-regulated sectors to have separate bidding processes. Floor price for non-regulated sectors set at 150 rupees a ton. For regulated sectors at 100 rupees a ton.
RBI defends new refinancing norms, says it's not restructuring under a new name, says rules on conversion of debt into equity being worked out and discussion with SEBI is on.
SEBI flexes its muscles to show off the new powers it now has. Passes the first imprisonment order ever. Sentences a defaulter to civil imprisonment of 6 months for failure to repay 1.64 crore rupees.
United Spirits is set to make a second attempt to get minority shareholder nod for entering into agreements with other Diageo subsidiaries for the sale, license and distribution of its brands, but brokerages are not impressed.
Please, what is this? Members of both sides must respect that and should be allowed to speak.
Okay. यहाँ कौन सी बात हो रही है? क्यों इतना उत्तेजित है? लोगों ने आग्रह किया।
Is your leader, you sit down. बहुत सारे बिल पास करने हैं. अगर आप लीडर ऑफ द ऑपोजिशन को बोलने नहीं देंगे, अगर आप The government is ready to discuss the issue and then the ministry is ready to respond to the issue. पहले आप ये नहीं होगा. आपका व्यवहार पिछले 1 हफ्ते से क्या है? मंत्रियों का ये आपने सारी मर्यादाएं स्पष्ट कर दी है.
आज भी चर्चा कैसे हो, कौन कब बोले और कौन जवाब दे, ये सदन या अध्यक्ष तय नहीं करेंगे, ये विपक्ष तय करेंगे.
The House is adjourned for the whole day. To meet tomorrow at 11
Well, he has more proof that our political leaders do not need a microphone to make themselves heard. Uproar over the conversion controversy continues to hold Rajya Sabha to ransom, and with just 3 days to go in this session, it looks like the Rajya Sabha will not be the place where actual work will actually get done.
So much stuck over there. For example, the insurance bill, the GST constitutional amendment bill,
which is yet to be tabled.
This government doesn't have the numbers in the upper house.
But maybe they will look at other options like the ordinance route, which is what we are getting to pick up. Could be a possibility, an option of the last resort to push through the insurance reforms. Now, a stark contrast to the amount of work that's gotten done in the Lok Sabha, where Team Modi's second parliamentary session is on and underway, and of course they have the numbers there. Now, speaking of contrast, let's go straight to our top story, because that is a study in contrast. After 5 days of taking some brutal hits, the bulls finally managing to break their shackles. And the energy to do this came from the US Federal Reserve, indicating overnight that it was in no hurry to tweak rates. The Nifty surged over 1.5%, ending above 8,150. The Sensex jumped over 400 points, closing above the 27,000 mark, 27,100. It was the mid-cap counters that shined today. Of course, they have been hammered out of shape, so recovering, and that index index zooming about 3% higher. Anuj joins us now with the details. Anuj, it looks like the bulls are back in the driver's seat because of the commentary coming in from the US Fed, which really is along expected lines, playing according to script.
At least for today, the bulls dominated, and quite clearly a lot of this because of what happened overnight with the US market and what the Fed had to say. Fed normally never disappoints the bulls, and this time also it obliged, and really the bulls took it with both hands. What happened in India though was quite remarkable. You had absolutely no losing stocks in trade today. The advance decline ratio was about 8:1. In the top 50 traded stocks, there were 49 stocks in the green. So really, it was a powerful short covering bounce that you saw in today's trade. And as you would expect, banks led it from the front, and commodity stocks also participated. In fact, let's talk about some of the stocks that led the market today. 25 points came on account of one single stock, ICICI Bank. That was up 4%. Larsen & Toubro and Infosys were the other two big contributors in terms of today's rally. Then, of course, we had banking stocks which did quite well in trade. Bond yields are back below 8, and that's helping. So Bank of Baroda, PNB, Axis, they were all up in today's trade. Commodities, especially oil and metals, both these sectors were doing quite well in trade today. Jindal Steel was up 7.5%, Cairn was up 4.5%, GAIL was up about 4% or so. Some other prominent Nifty winners included stocks like BHEL, Maruti and Cipla. So it was across the board rally that we saw in today's trade. Let's take a look at some of the mid caps. Two things. One, the high quality, high pedigree stocks did remarkably well in trade today. Stock of the day was Ashok Leyland, 7.5% higher. Arvind about 8.5% higher, and PFC about 9% higher. And then we had some momentum stocks, the high beta ones, which also did quite well in trade today. Mastech locked on circuit, JK Tyre locked on circuit for better part of the day, and HDIL up about 11%. So really today was a powerful short covering bounce. The big question is, was it just that, or is it an end to correction? That's something that we'll find out over the next 3 or 4 trading sessions.
Will the rally continue, or is this a pop? Well, Anuj, we'll find out soon enough. Thanks very much. In the currency market, the rupee also ended higher at 63.11 to the dollar versus 63.61. That was the level that we saw yesterday. And this is what's caused the mood to change. This is the news that came in from the US Federal Reserve overnight. In its policy statement, the Fed Open Market Committee, or the FOMC, signaled that it's likely to initiate interest rates in middle of 2015. Now, this is a long expected line. This despite the turbulence in the financial markets. The FOMC emphasizing that the slack in the labor market continues to diminish, while headline inflation remains below the long-run 2% target. The FOMC has attributed the underperformance to a sharp decline in energy prices. The highlight of the policy was that the FOMC has dropped its considerable time assurance, and that has been replaced with forward guidance that states the Fed will be patient in beginning to normalize the stance on monetary policy. Yellen says patient means at least for the next 2 meetings. Any reference to the financial market turmoil or concerns about global growth were absent from the market commentary. Nandara.
And we saw a global rally post all of those comments. Let's do a quick check. First up, European shares rallying with global sentiment boosted, like I said, after the Fed's commentary. The FTSE, let's bring that up for you. It's up by almost 2%, 114 points. And German DAX, meanwhile, up by almost 250 points. And the French CAC up by about 127 points. US markets not to be left behind. They are, of course, the cause of all of this surging. The Dow, Nasdaq, S&P 500, all of them close above 1%, almost 1 to 1.5%. Fall in jobless claims in the United States has also helped sentiment. From the equity markets to the crude markets, and in fact, we've seen a huge pullback as far as crude prices go. A massive rebound. Brent, has given up a little bit in the last half an hour or so. Brent crude currently at just shy of $62 a barrel. NYMEX crude, which was languishing below $54, now at $56.09 a barrel. In other news, Russian President Vladimir Putin today insisted the Russian ruble would stabilize. He warned the economic crisis could last 2 years, saying economic recovery worst case scenario in 2017. Speaking at his annual end of the year news conference, Putin blamed external factors for the falling ruble. He also accepted Russia had failed to diversify its economy, which had been hit by falling oil prices and sanctions over the Ukraine crisis. Putin also used this platform to once again reiterate Russia is not behind the trouble in Ukraine.
Well, 1,200 or about that many journalists attending that press conference by Vladimir Putin, of course, reiterating the Russian position as far as Ukraine is concerned. But let's head back home. We've seen global markets recover, the Dow, the Nasdaq, the S&P 500, the European markets all looking very good, very strong. That bodes well for our markets when we open for trade tomorrow. But something good may still emerge from the ongoing crisis at SpiceJet. The Ministry of Civil Aviation has finally woken up and sounded an alarm on domestic airlines and their precarious financial situation. Government sources say that not only is SpiceJet in deep financial crisis, 2 other domestic airlines may also find themselves in a similar predicament in the near future. Take a look. With little hope in sight for SpiceJet, the Civil Aviation Ministry is ringing the alarm bell. Among the proposals being considered is a rather contentious one, fixing the minimum airfare for each route. As of now, there is no regulation on airfares. SpiceJet has been at the forefront of offering steep discounts through most of 2014 in a bid to stimulate demand, forcing competing airlines to follow suit. Many analysts say this practice has hastened the airline's decline. Sources say all airlines may be asked to submit their break-even cost per kilometre. Then, after adding 5% to this figure as margin, the minimum fare would be fixed for a route, of course depending on the type of service offered and the type of aircraft used, etc. Sources say this step will ensure that no airline in future goes into losses. There is a proposal to fix the maximum fare an airline can charge regardless of route or other variables. We learn a 15,000 rupee cap is being discussed. A series of other steps are also being proposed to grant financial relief to loss-making airlines. These include getting the airline industry infrastructure status already enjoyed by airports. This would mean airlines have access to cheaper funds. Allowing airlines to go for ECBs with lower interest rates. Complete income tax exemption for a fixed period. The government should direct banks to cap interest charged on borrowings by airlines at 8%. Reschedule payment of dues to oil companies, airports and even banks for a longer repayment. Amid cries of favouring just one airline, the Minister of State for Civil Aviation, Mahesh Sharma, was forced to clarify that nothing was being offered to any one airline. But now that there is a prospect of 2 other airlines also possibly coming under similar financial stress, perhaps the Prime Minister's office may be jolted to action. In New Delhi with Sindhu Bhattacharya, this is Shireen Bhan. Well, this is at a draft stage within the Civil Aviation Ministry, yet to be taken to either the Finance Ministry or the Prime Minister's office. But let's see if this does indeed go through. Here's the latest on SpiceJet, by the way. The beleaguered low-cost airline finally has something to smile about. It has announced the resumption of normal operations, though we learn that most of these were on a cash-and-carry basis as far as fuel supplies were concerned. But that's not all. Sources say that SpiceJet has informed the government that an investor will be coming on board soon. This is a signal that the airline's money trouble may decrease drastically. Remember, former promoter Ajay Singh has expressed an interest in buying back into the airline and is even learned to be helping up draw a revival plan. As our sources tell us, Ajay Singh, the former promoter of SpiceJet, has been at the Civil Aviation Ministry. He's been positioned there. He's been holding negotiations and conversations with the Aviation Ministry. So it's very evident and very clear that Ajay Singh could be in the race as far as SpiceJet is concerned, coming on board with a revival plan and perhaps cash. While the Aviation Minister Gajapati Raju has declined to confirm this, he did add that the airline has operated all scheduled flights today except one which was cancelled. He is hopeful that things will get better for the company.
From yesterday, if you see, today there's slight improvement. So like that, if they are able to continue to improve, come back to normal, you have no problem with that.
Have you been assured that the situation will not go back to the yesterday's or day before situation? It will be better from now on?
For me, it will be like an operation hope not. We don't want to...
Well, that's Civil Aviation Minister Sindhu Bhattacharya, a colleague who's been tracking this story, joins us now with an update. Sindhu, we understand that Ajay Singh continues to be at the Civil Aviation Ministry. Clearly, he is involved with the revival plan for SpiceJet in some form or fashion. What else did the Civil Aviation Minister have to say about the revival plan? And what are you picking up from sources? Is it Ajay Singh alone? Is he coming on board with somebody else? When is the cash likely to come in?
Shireen, Ajay Singh has been into hectic meetings in the Ministry of Civil Aviation for the last 2 days at least. There is every possibility that he may invest in the airline, but we wouldn't know for sure till the money is on the table. Our sources have already told us that Airports Authority of India has been assured of fresh bank guarantees of about 120 crore rupees in the last 24 hours. Sources tell us that only 100 crore exposure remains to banks. Now, if I remember correctly, the exposure was much larger 2 or 3 days back. So where is all this optimism coming from? Where are oil companies getting their money even for cash and carry? Where is the Airports Authority of India getting this assurance? Obviously, there is some assurance that SpiceJet has been giving. Now, we only know of an interest of Ajay Singh in the investment. We don't know if there is any other investor, but certainly things are looking better. The aviation minister said so. Our sources also are saying so. Ultimately, the proof of the pudding is in the eating. So, as and when the money actually comes in, only then there will be a confirmation that there is an investor. As far as circumstances are concerned, the operations look far better than they did yesterday.
So with Ajay Singh regularly being seen at the Civil Aviation Ministry, of course, everyone is expecting and thinking maybe he is going to be the white knight for SpiceJet. Well, only 3 working days remain for the ongoing winter session of Parliament to end, and yet that week-long logjam in the Rajya Sabha is showing no signs of breaking. The Treasury and the opposition benches refused to yield on their respective positions in the upper house, with a united opposition continuing to demand a statement from the Prime Minister on the conversion issue. The uproar continued even as the Prime Minister, Narendra Modi, attended the upper house today. Rajya Sabha had to be adjourned without transacting any business, and as a result, the government was not able to table and initiate discussions on the insurance bill or even the company's bill for that matter. However, Lok Sabha saw business being transacted with the lower house clearing amendments to the Motor Vehicles Act that will legalize e-rickshaws. So will the government now use the ordinance route to put in place a 49% foreign investment cap on insurance? Mithupana Bhyan asked that from Jayant Sinha, the Minister of State for Finance.
It's not going to be possible for us to have a debate on that constitutional amendment in this session. That was never the intent, but it was to actually put it in the pipeline, introduce it into the legislative calendar, and to set it up for the next session, which will be the budget session, a very important session, in fact, the most important session of Parliament, so that we can begin the process of getting it through both the Lok Sabha, the Rajya Sabha, and of course the states as well. And of course, you know, we are very committed to the timeline that we've announced, which is April 1, 2016. Well, we remain very hopeful because we are about getting the people's business done. And the people's business, which is why we have been sent here, we've not been sent here to just shout in the upper house or the Lok Sabha. We've been sent here to do the people's work. And to see the people's work being stymied in this manner, being boycotted by the opposition for no real reason. I mean, clearly their only purpose is to block proceedings and to be obstructionist, is I think a very tragic situation, particularly because it pertains to the Rajya Sabha, which has very many senior members of government, former ministers. The former Prime Minister is a member of the Rajya Sabha.
If this trend continues, then you know, because it's a crucial bill, is the ordinance a way out if at all this house does not function?
Well, we'll have to see what the strategy should be, but ultimately we are accountable to the people of India. They have sent us here with a decisive mandate, and the decisive mandate is to be able to get the economy moving, to get jobs created, to improve the quality of life of our people. And so, you know, we have a lot of very senior, capable leaders in Parliament, in the Lok Sabha and the Rajya Sabha, and we will do whatever is the most appropriate in the interest of the people of India.
So that's the Minister of State for Finance saying, as a last resort, the government may consider the ordinance route to push through the changes as far as the insurance reforms are concerned. Remember, 3 days to go. Rajya Sabha continues to be deadlocked unless the Prime Minister makes a statement. Now, even as the government grapples with pushing crucial reforms and laws through Parliament, all eyes are now on a more immediate event. The mid-year review of the economy is scheduled for tomorrow. Expectations on the street are that the review could see the range of GDP growth estimates being cut from 5.4 to 5.9% to 5.4 to 5.7%. And that's because farm output has been weaker than originally estimated. The street is also waiting to see what the review has to say about the government's plan to meet its fiscal deficit target of 4.1% of GDP by the end of the year. Remember, on the 10th of December, the Finance Minister had sounded a warning, saying fiscal deficit has reached unmanageable levels. This after 90% of the fiscal deficit target of 5.31 lakh crore rupees was hit in the April-October period itself, meaning there's very little headroom left now for the government. What's also worrying is that tax mobilization may fall abysmally short of the full year target of 9.77 lakh crore rupees, with only 38% of the target being achieved in the April to October period. In addition, the government has not made much headway when it comes to disinvestment so far. It's only raised 1,700 crore rupees by divesting a 5% stake in SAIL, a far cry from the FY15 target of 58,425 crore rupees. So stay tuned to CNBC TV 18 for the midterm review.
And a new allocation policy for incremental gas production is being finalized by the centre, and the Modi government may rejig the priority sectors as laid down by the previous UPA government. The fertilizer sector likely to lose its top place in the priority sector list, with atomic energy and space research making a debut in the second place. Even the power sector will be moved lower in the order of priority for the right to gas. City gas and piped gas will be the big beneficiaries of this move, and the markets gave the stocks of those companies a big thumbs up. Here's an exclusive report. A cabinet note is being finalized by the Oil Ministry this month to rework the allocation of new gas to various priority sectors. CNBC TV 18 learns the fertilizer sector may be removed from the top position and replaced by city gas distribution and piped natural gas companies to get the first right to domestic gas. Such companies are currently ranked 4th in the priority list. Shares of companies like IGL and Gujarat Gas rallied on the back of this news. Sources say CNG and piped natural gas or PNG are clean fuels and would help replace subsidized diesel in automobiles and LPG in households respectively. Meanwhile, atomic energy and space research may make its debut into the priority list at number 2. The cabinet note ranks LPG plants in 3rd place, down from the current 2nd position as a priority sector. In 4th place is gas-based urea plants, and in 5th, power plants, complying with the condition the entire electricity produced from allocated gas be sold at regulated tariff. Such plants will also need to have a power purchase agreement in place for minimum 1 year. The proposal demotes the power sector from 3rd to 5th spot. The second debutant in the cabinet note is the MSME sector, coming in at 6th place in the list of priority sectors for domestically produced gas. The rationale is this will help in generating employment. Given the fall in domestic gas production over the years, the Oil Ministry is proposing to freeze allocations to all sectors except CGD and LPG at supply levels of 2013-2014. Sources say the Oil Ministry wants to do away with the practice of making unrealistic high allocations and rather work with existing production data. In New Delhi, Nayantara Rai.
So the pecking order of priority sectors as far as incremental gas utilization concerned likely to change. Now, the Coal Ministry has initiated public consultation ahead of the release of the bid document for the coal block auction. The Ministry is hopeful of moving Cabinet post the 22nd of December to get approval for the formula to fix coal prices. While the uncertainty of the bill's fate in the Rajya Sabha continues, the government is working to ensure compliance with the Supreme Court deadline. The Coal Ministry will miss the December 22nd deadline to float the tender bid document for the upcoming coal block auctions. But the Ministry is not perturbed and has released the approach paper for public consultation, post which the government will seek cabinet approval. The government has set 100 rupees per tonne as the floor price for regulated sectors like power, and also capped prices for Coal India in a bid to regulate electricity tariffs. For the unregulated sectors like steel, cement, captive power and merchant power, the floor price has been set at 150 rupees a tonne. There will not be a ceiling on prices for the unregulated sectors. Sources also add 101 coal blocks will be allocated, of which 65 coal blocks will be up for auction and 36 will be allocated under government dispensation, where SAIL is likely to get 1 coal block. The bidding method will have a mechanism to keep a check on cartelization during the e-auction. While the coal ordinance is yet to be passed in the Rajya Sabha, the government is hoping to be auction ready to comply with the Supreme Court order. In New Delhi with Anshu Sharma, this is Shireen Bhan. Well, let's now move to corporate news. United Spirits, which is now owned by Diageo, is making a second attempt to get minority shareholder approval to enter into agreements with other Diageo subsidiaries for the sale, license and distributions of its brands. But CNBC TV 18 Sajid Mangat and Farah Bukhwala report that this attempt may also fall flat since brokerages are not impressed. It doesn't matter what brokerages have to say. What matters is what minority shareholders will have to say.
Diageo-owned United Spirits wants to be able to license, sell and distribute products belonging to other Diageo subsidiaries. And even though this proposal has been rebuffed by minority shareholders once, USL has called for a second extraordinary general meeting on the 9th of January to try and win them over. Here's what the agreements entail. As per the pact with Diageo brands, USL will manufacture and distribute VAT 69, Hague Gold Label and Black and White. The agreement with Diageo North America allows it to manufacture and distribute Captain Morgan rum, vodka brand Smirnoff and related variants. And its agreement with Diageo Scotland lets it license and distribute brands like Johnnie Walker and its variants J&B, Ciroc, Baileys, Lagavulin and Talisker. All these agreements are indefinite in nature. Brokerages, however, are not raising a toast to these plans. Diageo has proposed to revise the agreement and increase the EBIT margin from the current 6% it pays USL to 10% for license and distribution. With Diageo expecting sales in the first year at around 700 crore rupees, this works out to an EBIT of 70 crore rupees. The new agreements also call for USL to bear working capital expenses to the tune of nearly 200 crore rupees. These, brokerages say, will mean a drop in USL's post-tax return on capital employed to 23%. And this is unacceptable because had USL leveraged its strong distribution network, it would have commanded an ROCE of over 23%, given the fact that retail outlets have been growing at less than 1% every year. Also, brokerages point out that Diageo is likely to keep 75% of the profits as the brand owner, meaning USL will get only 25%. And that's a scenario that seems to favor the parent Diageo over United Spirits. Should minority investors be swayed by these arguments and vote once again against Diageo's proposals, then the British liquor maker will be caught between a rock and a hard place. The only option available to it to get its way will be to delist United Spirits. But here again, there may be a problem. The recent delisting guidelines say Diageo has to get 25% of USL's public shareholders to participate in the offer. And that may be easier said than done. In Mumbai with Sajid Mangat, Farah Bukwala Vora.
Well, a crucial test there for Diageo and USL. On that note, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. We'll return with all the market action tomorrow morning. Till then, goodbye.
CNBC TV 18, celebrating 15 years of leadership.